Good morning and welcome everybody back from the holiday weekend. Today is another edition of Toggle's daily video insights, and we're going to take a deeper dive into one of the many insights that Toggle produces on a daily basis across thousands of US equities. For those of you joining us for the first time, I'm Jan, one of the co-founders of Toggle, and today the focus is going to be on Telefonica Brazil, one of the largest telecom companies in Brazil. If you'd like to see these insights more frequently and get help breaking down what fundamental drivers might currently matter for a particular stock, sign up to our YouTube channel or else check us out on toggle.global, and you'll also be able to test drive the Copilot yourself. Now, the focus today is going to be, as you can see, on one of the many positive forces that Toggle has been highlighting for this particular stock. So we've had actually quite a range of them recently. The one that we're going to focus on today is highlighting that the entry point is really quite compelling for this particular stock. And if you click on this card, it's going to explain very quickly as to what exactly is going on. Now, the key to understand here is that the chart is the central feature of any one of these insights because it basically tells you what the conclusion is. And the conclusion here is that a possible driver of the stock price in the next 3 months could be a catalyst that has to do with the level at which the stock has been trading recently. So over the next 3 months, but possibly much sooner, the stock could rise as much as 14%. So starting at 846 up to 964. Assuming, of course, that all goes well, it should stay within this confidence interval and not dip below the red line at 787, because if it does so, the assumption is that something else must be going on, and so the driver that Toggle is highlighting is not actually currently the most important one for this particular stock. Now, what's going on? So Toggle would have analyzed 7 similar occasions when we've had an entry point like what we have now. So the best thing to do is looking at why it might move, and you can see exactly what's going on. So what the system is basically highlighting is that, look, the price is now retesting levels that it's tested last in 2016, and before that it actually in early 2000s. And so the question is this potentially a really attractive point? Because each time when the stock was trading here, it then subsequently saw that probably the investors had gotten too bearish on the prospects for the business, and the rally reached as much as 14%, sometimes more. In fact, what did it reach in the past? And this we do by clicking at past performance. And here the system has analyzed all of these past returns. So across the 7 episodes, across a number of trading days, around those periods, what have the actual 3-month returns been for the stock if you had invested previously? Because that's ultimately what you as an investor want to know. If I had invested in those other episodes, would I have made money? And the answer is yes. Now, as you can see here, it didn't work every time. So in some of those episodes, you lost as much as 5% in some cases. But the most important thing is that the upside was substantially larger, in fact, as much as 3 to 4 times larger than the downside risk. So this is the kind of one-sided situation that Toggle is always trying to find out. And so the bottom line here is that it's definitely a stock we're looking at. It's trading at an interesting level. And so if it fits in your portfolio and aligns with your fundamental view on the stock, it's definitely time to reassess whether or not this is the time to get in. In the daily brief today, which should already be in your mailboxes, we also discuss what drives inflation. If you don't get the daily brief, sign up on toggle.global. It's a lot of interesting daily market content. Thank you for your attention, and we'll see you again on Wednesday.